All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's start off going and looking at the 100K challenge. We do have two new signals here today, and one on Amazon and one on Bristol Myers. Now, interesting thing about this is these are two of the names that were added to the watch list to go from 50 to 60, and they're two that I need a kind of perfect scenario to trade. What are those scenarios? Well, with Amazon, I need to have the challenge have some significant gains so that I can buy an option without spending $2,000, or where $2,000 is a good kind of allocation there. We're not quite there. Getting closer, but still a grand or two away from that situation. So not going to be able to trade Amazon. And then the other one, Bristol Myers. This is in this kind of group of stocks that is dependent on the spread. And Alcoa, Arconic, Twilio, Bristol Myers, Raytheon. Sometimes the spreads on those are really bad, and that's just from trading them over time. And if we go and we look at Bristol Myers, I'm not willing to pay a big spread, and you can see we're talking about a 14-cent spread on $1.30 option, so about a 10% spread there. That's way too much. 10% in, 10% out. Just doesn't make sense to take that risk here. So not going to trade either of them if I did have the cash to put into them. That all said, if we go look at it, I don't have the cash to put into them, right? If we look here at Procter & Gamble trading at 108.15, it's not at the profit level. And I know someone will say, hey, Jeff, it's close enough. Why not just... We could, right? We could, but going to run with the algorithm here, right? And look, please don't let me stop you from adjusting your position or something like that. Just with the challenge, not going to do that here. And that doesn't mean I think Procter and Gamble's going higher or going lower, or going to do X, Y, and Z tomorrow or anything else. It's not my decision to make, right? It's within the parameters of the algorithm, and the decisions will stay within that. And then here with JD, prices 30.56. We're nowhere close to the stock exit level or the profit level, but we are getting. Tomorrow would be the auto exit date if the option is red, and it would be next week if the option is green. Tomorrow, if by tomorrow afternoon at this time, we're not talking about Procter and Gamble trading above 108.38, I have to get out, right? And so 100% chance of 100% certainty that something will be done with Procter and Gamble here tomorrow. Whether it be because tomorrow morning it's over the profit level, or tomorrow afternoon over the profit level, or tomorrow afternoon it's where it is right now, or down a little bit from where it is right now. Going to be out here, or going to have some adjustment on that tomorrow afternoon. Let me just update the prices here. So Procter & Gamble, we're looking at the mark of 427 here is what the option is going for right now, 427. I'm just going to put 425 realistic there. And then JD, the option on JD is 234. So that's 234. So that puts the challenge, up over 4,000 here, which, for the first two trades, first week of the challenge, not too bad. I'll take it there. The pace of a challenge to kind of keep on the 100K pace. You want to see about a 30% increase each week here to start. And, that basically means first double after 3 weeks. So, we're on our way. We need a 50% gain from where things are now to have the first double. So in a good starting spot here, and ready to rock here. There are some other stocks that could come and signal here tomorrow, or even tomorrow morning, tomorrow afternoon. Some of those that I talked about this morning, but the only two signals that actually triggered here are Amazon and Bristol Myers, and they both triggered bullish, and neither of them do I have the cash to trade. Similar to Raytheon and Chipotle here yesterday. Okay, all right. So that is that's the 100K challenge there, and where that sits now. As we kind of go into the close here today, we are looking at a market whose internals are shifting a little bit, and let me kind of show you what I mean. Bullish percent index, there is no change, right? There's absolutely no change there. Small caps, we are starting to see a change. In fact, we've seen small caps have a really nice bounce the last few days, but large caps are leading the way. And this fresh gap above the 7-day moving average today, a lot of times that is significant of some more upside to come before some selling. And, kind of like this scenario here or this scenario here, but fresh gaps above the 7 after pullbacks, they're typically met with more buying, right? And, do we see a lower high come in? Do we see a higher high come in? Obviously we'll see. But we have seen the overall metrics turn neutral on this move here today. And in fact, before the close today, we could actually see them go bullish. If you look at kind of what's changing in the metrics, it's not things like the bullish percent index, but if you look at the number of stocks trading above the 7, 70% of the market is above the 7. That's a big number, even on a bear market bounce, right? That's a number that, is really high for a bear market bounce. But one of the numbers that's still kind of in this neutral territory is the number of stocks, above the 20. And this is what we would kind of, one of the things we need to see improve, to kind of say, hey, market's headed to a new high. But we only have about 44% of the stocks trading above the 20, which, when you see the 7s where they are and the 20s where they are, suggests more bounce than, new market trend emergence. If we come in, we look at volumes. So we'll come into the NYUD, the New York Stock Exchange, the advances versus decliner volumes here. The volumes are pretty heavy on the upside here today. I'm just going to come in and come in here to the NYUD cumulative. Let's come in and put it to 2018-0101. And kind of see what's going on. We've had this strong dip, right? And again, this is an indicator that, the day of isn't, fully accurate. It's fully accurate after the market closes. Just the way stock charts does it. The market vibe algorithm doesn't use this exact setup, but it's the best visual setup that I can show. But we've gone from some bearish volume flows to over the last 2 days. The volume flows have been strongly bullish. They haven't pushed into, bull market territory, but they've pushed right on back into that pretty strong neutral territory. So we see that change in that element here. If we come and we look at just kind of the sector flows out there in the market, let's see if I can get it here. Sector summary. We just come and look over the course of the week, right? Real estate, utilities, consumer staples, it's a pretty bearish sector flow. We have the more kind of bullish sectors on the bottom, the more bearish sectors on the top, in terms of how they've traded this week. But over the course of the last month, you can see, hey, you know what? We still have real estate, staples, utilities. It's still a bearish sector flow. And this is where the bulls haven't, taken any real control here, even though here today, yeah, it's a pretty bullish stack. Yesterday, we saw a pretty bullish stack. So we're seeing some kind of, short-term switch in this, but we haven't seen a more material switch. And, it really is indicative of the type of bounce that we're still going to have some sell days ahead. Or is this just markets, all sunshine and roses again, back to its Teflon state? There are some arguments for it, right? We had a Fed governor here today basically criticizing the Fed's 9 rate hikes, saying the next Fed action needs to be to cut rates, which is what U.S. President Trump has been, touting here, which, we have both parties, U.S. President and the Fed, who have been talking about this just great economy. And now they're both talking about cutting rates, which is, really, really interesting. But we have that. We have, a little bit of reversal in some of the data here this week, and kind of a bullish reversal in some of the data. Again, it's some of the smaller points, not some of the more major points. So we'll see kind of how it shapes up. But, a few of those things. And then, you have U.S. getting ready to go to China. You have U.S. President Trump telling the trade negotiators to make something happen, and just kind of putting that out there. And, someone in the White House saying that, a deal may not be done this year. So it's kind of really just up in the air. But what have we known? When things are up in the air when it comes to the trade war, when there's not a lot of happenings, going on with it, what's the path of least resistance for the market? It's been higher. When things are happening with the trade war talks and everything, path of least resistance has been lower. And so we are seeing that here in the market, yesterday, today, and, Anyway, that's a story that isn't going away. It's a story that is here to stay in the markets and here to stay for, in my opinion, years to come. And, I expect the U.S.-China deal to get done, and I fully expect U.S. President Trump to turn his eye to Europe right after that and to say, hey, you know what, we're renegotiating with Europe. And, that'll kind of kick off a whole nother, drama here. There is talk that, some of the NAFTA stuff is getting worked out and all of that, but, these are processes, not events. And, so anyway, that's where things are and how they are sitting. Some nice strength in the financials as we saw, Europe levy some big fines on some of the big banks. And, it's one of those where a lot of times the fear of that creates some selling, and then when it actually happens, the market relaxes and buys them because now it's a known thing. They know, okay, hey, this is happening, this is done, and don't have to worry about what the quantity is going to be going on forward. Okay, alrighty. Thanks for hopping on. Have yourselves a fantastic evening. I'll be back with you here tomorrow morning, and we'll talk to you then. Take care.